Ritu Arora from Canara HSBC OBC joins us on the show right now. Ritu, hi, good afternoon. What is it that you're making of Unilever's Q3 commentary? They're saying that consumer demand remains weak and volumes have only slowed further. And this is a little surprising considering one's already talking about as to how there is a rural-urban demand uptick. Do you sense that perhaps this may not be the same case from Unilever and ITCs of the world back home?
I would like to believe that consumer discretionary spending is coming back. Every trigger is there for it to come back, like you counted, good monsoons, be it Aura, be it pay commission, rural economy as well as urban economy should start looking up. And we are betting heavy on domestic consumables and consumer cycle returning. So I hope that we will see a different result from the other companies going forward. And there's every strength that is to be demonstrated in the economy is at present there. So economic, macroeconomics are very much in place. And now I would very eagerly look at the results showing an uptick.
Ritu, that's a fair point that consumer discretionary would pick up. But what about staples? Consumer staples is where I see a lot of problem. I mean, the general India mood is by soap companies, by shampoo companies, they will continue to grow. But if I look at some of these penetrated categories, not only from an HUL, but from a Britannia, from an Parle, from Coke and Pepsi, even from that matter, Jubilant Foodworks, none of them are endorsing that, big demand is back.
We are personally looking at the fact that the economy is looking better than it ever did, be it in whatever parameter you pick up, be it inflation, be it the currency position, be it the current account deficit position. So all macroeconomic fundamentals are in place. There is a good amount of purchasing power with the individuals, and hence for us, domestic sectors, be it auto, be it private sector banks, NBFCs, those are the spaces, cement, capital goods, are the spaces where we believe we will start seeing a turnaround in the coming result season. And that probably we will see more upgrades than downgrades is the expectation. And we'd see the end and the bottom of the earnings downgrade cycle. But clearly we are looking at the domestic cyclicals being the trigger there. And so we will be watching the results quite closely.
Ritu, what about the market per se as well, because we are very close to testing those surgical strike days lows already. What is it that you're sensing about what's transpiring? Because this doesn't seem like an India-specific problem. You've got some weak Chinese data coming in, and that seems to be rubbing off on European markets. We too are facing the heat. What's happening out there?
I would continue to believe, and even last month when we discussed, that a time correction and a consolidation in the market should not disappoint us. It is to be expected after the rally that we have seen over the last few months. What started in March with a 10% return in the month of March has sustained over the last few months. And so a pause is welcome, it is healthy. Having said that, it is very important to know that FII flows have come down to a trickle, which will reflect in the market movement. Global worries continue to dominate the mind space, and China, Europe, US, everywhere we are very closely looking at interest rates and how the near zero negative interest rate cycle will be corrected and how growth will return. And with no clear solution in sight, there will continue to be a lot of headwinds coming from global economy. And hence, even our positioning, while Indian economy remains very robust, very sound, it's almost like an island of calm in turbulent seas. And hence, our portfolio has been very domestic focused for the last few months. This kind of turbulence that we are importing doesn't surprise me. But of course, it is something that we need to be cautious of, and I would suspect it could continue for the next few months at least.
Okay, Ritu, good chatting with you. Thank you so much for taking the time out and speaking with us today.
Thank you.
That's the view then coming in from HSBC, Canara, OBC, and shifting focus then.